Hey guys, this is my weekend video, so I'm going to go as fast as I can here. Real quick here on SPY, my ultimate targets here. I'm starting on a monthly time frame. We're starting the first of the month. This is what I always look like. This is my left shoulder. I believe this is the entire head of the current pattern we're in, and this is going to be your left shoulder down here. So ultimately, I think at the end of this correction cycle, we could potentially be seeing 240. That's assuming our uptrend scenario ends for sure. We can even come down all the way down post-election day. We can actually take that out. I've been telling a lot of people I've been looking for the 340 area as a potential target to the downside on SPY, basically giving out all of the Biden gains since he's been in office. So just keep that in mind going forward here. That would take us only to this area here, and our uptrend would still be solidly intact, in my opinion. So even giving up all of the Biden gains since he's been in office, it's still not the end of the world on that. It's actually when we start giving up the 327 area, that's whenever a much larger correction begins. Okay, in my opinion. Okay, guys. So heads up on that going forward here. I'm going to go down here on the daily time frame so I can show my market maker moves here real quick. Here on SPY. So I do want to point out here we do have expanding ranges this morning or this week. We do have more premium in all of the options for the most part across the board. This isn't hugely explosive yet, but I do want to float that idea. We are paying more for these options. I mean, SPY's not getting too far out of it's not too far gone yet, but it's something to think about in your option premiums when you're trying to trade this market. Okay, guys. Qs. We're going to go back over here on the monthly real quick here, guys. Monthly. Qs really look really bad, because that's a much deeper shoulder area. This is your shoulder area down here. So technically, this is your entire head up here. Okay, guys. This takes you back down to April 2022, 2020 support. That's not that far gone, too far back there, but we went rocket ship to the upside on all this government stimulus, in which all that stimulus is supposedly coming back. So we could very quickly be taking back to the election day here on tech. I do think that's going to be happening here during the course of the summer here. We will be taking all this out early summer, early spring, late spring, early summer. I do think we're going to be checking this out. Who knows? As fast as we're coming down here on these multi candles, that is just one god awful ugly candle that we had for last month, and we closed right at the dead lows of that candle, suggesting we're going to open the month very ugly here. Okay, guys. So ultimately, though, your target is 190. Okay. Okay, another thing, our indices, even on the Qs with the carnage we've had this past week, they still have not really jacked to high heaven the premium on our indice ETFs yet. You can tell by going into next week, we're not paying, we're paying just about exactly what we did coming into tech last week. But remember, we're over the hill on a lot of these tech earnings now. We got AMD this week. That's the big one to report this week. And then we have NXPI also. So there's really not a lot of major tech. A lot of that stuff's behind us. Okay, guys? Okay, that's that. IWM. And we're going to start over here on the monthly real quick. And we'll go back over here real quick. Get her loaded up. Okay, guys, so bottom line is we're coming into that 180 area that I've been talking about for a very long time here. We were kind of in no man's land up here between our quarterly pivots, but this is still an entirely head area. This is our left shoulder right through here, okay? So bottom line is your support, critical support, is way down here at 132 on the monthly time frame. Look at that horrible candle. Every one of these are this. We're marking new lower lows here on IWM. It's leading the way to the downside. Heads up on that. Daily here, guys, real quick here. Since we broke, that's another one. So you keep in mind, the IVs are really not getting jacked yet on these either. So remember that going forward here. Okay. Okay, guys. So some little tells on watching our VX futures to tell us how price action is developing stuff. So we were going last week that when I was doing my video. We are right on the cusp of starting to go into backwardation. That means the front active contracts are more expensive than the uh, backward contracts. So theta alone, you're supposed to have these longer dated contracts. Uh, they call it contango. These are supposed to be priced more than the front ones. This is your active one. So that's why I scrolled it back up here real quick. Right now we're in backwardation. Well, we started to begin going into backwardation last week. The reason for that, they were buying longer dated options in the core of earnings season, okay, driving up premiums in the longer dated options for insurance going into earnings, okay? And back then, the option premiums were still relatively cheap. Okay. Now this week, it's even getting further out of control here. Okay. The front end, we're at the core of the earnings season. Now the front end is really getting bit up here because all the fear that hit the past couple weeks here, it's really getting priced into these options. And, we really had some, I mean, don't get me wrong, 80% of the companies are beating on the earnings. But the problem is, the core five stocks, your main TikTok stocks that have been driving the market for the past year, Netflix and Google, Netflix and well, yeah, I think Google too. Google, Netflix and Amazon just got destroyed. And so your primary TikTok charts, I got it up here on the watch list, right here. These are your main names. I mean, these have been the ones driving this market. Amazon, Microsoft, Apple, Google, Nvidia, Tesla. These are the driving force of the market. And these things have such a major market cap weighting, they're dragging everything down with them. Okay. And so we at least have gotten through those earnings. Okay. But we still have a lot of premium into these options going into this week, setting up for a potential another leg lower. And the reason I say that, I'm going to go into my individual index ETFs now. And so like XLF, okay, I want to zoom in here. Okay, guys, you can just look here. And let me zoom it down a little bit here so you can see it. Okay. It's really hard to see it on this one. Okay, XLF, they haven't really jacked that one up yet on XLF. The premium, what you can do, you can measure the high to the close. Okay, this is Friday's close to the expected high. Okay, and compare that to the week before. And so we got a little bit more premium on XLF. But my main takeaway, XLP, this thing has not corrected yet. If we start another leg lower, it's like climbing a ladder. On the way up, you have certain sectors, the leaders of the market, and the ones that are most price sensitive to growth, they're the first ones that come down. And then when you try to break another tier, then you're going to bring down the more defensive value stocks down with the markets. Okay, so they stair step down. That's the way markets typically work. It doesn't always work that way, but what they are doing here going into this week, they have really, really jacked up XLP. Okay, that is your consumer staples. This is supposed to be the value area of the market, but yet they have really jacked these up going into this week, suggesting we're going to see some pain in some of these consumer staples, bringing them back down to earth, probably in a very fast way going to this week. If that happens, then we're going to get that next leg down. I can't say for sure that's going to happen, but we've got almost double the option premium priced into these XLPs versus just a week ago. So keep that in mind going forward here. Another one that I was looking at here, we do have additional premium in your XLV. Okay, so you see how the green it's above that prior week close and this close. So that gives you an idea. So we're about 30-40% more premium in these XLV options this week versus what we had last week. So yeah, so they're pricing up these also going into this week. I don't think XLI was bid up. Let me double check it here real quick. I don't want to speak too long. No, it's in line with last week. I think XLB, that's your materials. Materials went nuts with this whole Crimea mess. Okay, so they do have about a 20% premium over last week on that one. And which one was it here? XLC's got about 20% premium. That's your telecommunications. That's Google, Facebook. Okay, so you could tell. You see how that's about 30%. You see how it's expanded. We really didn't have a drop in our telecommunications last week to speak of, but they have a lot more premium juice in these options going into this week. And the one that really got hit last week, largely because Amazon, that was your XLY. These things got juiced big time going into this week. This is your consumer discretionary. And really, Amazon had a lot to do with this, okay? So I do want to float this idea. So, keep that in mind. Well, it's not really juiced too bad, I guess. But, so just keep that in mind going here. We went way outside the expected move for last week. And, XLY really got hit last week. And so a lot of danger in consumer discretionary. I don't think the pain is done at all in that area. Some other things I'm looking at here, as far as the bullish side possibly this week, we got a 12-13% short float here on DraftKings. And we do have, it's really the first time that the NCAA it's been legal for most around the country and many states around the country to do college betting, gambling betting. So DraftKings has a huge 12-13% short float into that news. This thing could get a rocket ship. So this is one of the companies with the greatest short float coming into this week, going into possibly a fundamental industry change. So I do want to keep that in the back of your mind. I would not want anybody to be taking a short on DraftKings going into the coming week. Okay. Some other things I'm looking at here on this week here. So we do have, let's see, what was that top of that there? No, that's not it. Oh, 1 second here. We have, as of Friday, CVS and Walgreens Boots. These were catching a lot of action. Remember, guys, this coming quarter, we might be seeing Google or Amazon entering the Dow. So remember that. That's the risk you have trading CVS. Okay, CVS is possibly going to be the stock dumped out of the Dow. Yeah, so just remember that. So this thing here could have horrendous pain, even if it has good numbers and stuff. Horrendous pain because it is probably on the cutting block to get knocked out of the Dow. And then you also have WMB, that's your Walgreens Boots. That has a potential to get kicked out. I'm not saying it's going to. Just keep that one. Look at how this thing just went straight up. I don't believe in this at all. So that's Williams Company, WMB Williams Company. I thought it was Walgreens Boots, but WMB. This one here has a lot of room to come back down here. Moderna, that is a post-COVID play, probably going to get hit. McDonald's has a lot of Asia exposure. Look, probably going to get hit here. Okay, a lot of China exposure and Russia exposure. So it's going to get a double whammy from the Asia impact. Same way with Starbucks reporting this week. Definitely something to think about here. Booking has a lot of European exposure, like quite possibly could get hit pretty hard because of that European exposure and possibly even currency risk. Remember, we're having major disruption in the currency markets right now, and that could be positive or negative for DraftKings, depending on and considering how travel dollars that are bookings in euros. If they book these 2 or 3 months in advance, like you're supposed to on DraftKings, and now all of a sudden the dollar is going to high heaven, this is a major tailwind for earnings for DraftKings. So this is probably, in my opinion, one of my most bearish callouts for the week, DraftKings, because of the currency risk that you're facing, because of the huge. Not only do they have all the geopolitical risk over in Europe, but the money that they are making over there, they have the currency risk side they have to worry about as well. Okay, you got Lyft, Shop. I don't know much about Shop. I know all kinds of traders are really bearish about Shop. I don't know enough about it to actually give you much about it. You got Under Armour reporting this week. I can't really tell you one way or the other on that. It's, you have a rotation, a perceived rotation away from Amazon. We know Amazon really disappointed. Is that a harbinger that maybe all retail might be struggling here with the inflationary pressures. I think that's the case. I think even Walmart, Target have been just smoking it here lately. I think they're going to struggle. I think they're really going to struggle. I think it could very easily be a false signal here, and it coming right back crashing down on earnings. Now, Walmart's not this week. I don't think it's next week, but yeah, I'd say next week I think. So I do want to sort that out. Some of these, and then AMD. This is one thing I want to really float here, guys. When the market started correcting, the stock that led the way from the very get go, AMD. Okay, as soon as the earnings came out, it was getting sold into right out of the gate. So I mean, you know, this one here has acted as the leader to the downside, not the laggard. Okay, so and that's reporting Tuesday. So be aware of that situation. Really looks like we're coming down to the 72 area if we're lucky. It may be worse than that. We got our moving averages way down here in the 60s. So just be aware of that situation going into this week. So there's a lot of things I can sit here and continue to talk about here. But my main takeaway is I do think we are starting a much greater correction, and because, like I said, the consumer staples XLP, because they are pricing in that higher risk premium going in this week, I think big money's seeing the same thing. And one final takeaway I do want to point out, and I mentioned it to some other people in the room. I got an indicator, and it actually can monitor in 5 minutes the price action, what's hitting on the bid, what's hitting on the backs, on the bid and ask on the 5 minute time frame. And within the first couple seconds of most candles on Friday, there was a large order sitting out there dumping, 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 dumping. Now I don't want to have a big takeaway that Friday was it wasn't every 5 minute candle. I'm just saying, but there was some really serious selling side pressure. And then there towards the end of the day, 10 minutes ago, you got your money on close orders. 7 billion orders were sitting there waiting to sell on the sell side into the last 10 minutes of the day. And there's a really, really good chance a lot of those orders have not satisfied coming to start this week. So if we're green starting tomorrow, I will be shocked. I'm thinking we'll probably have a nice gap down. It will be darn lucky to be near flat. Okay, so that's pretty much my takeaway on everything. So I didn't actually give you any targets where I thought we would be going by the end of the week, which I normally do that. I'm sorry, guys. So bottom line is, if your next support would be 405, and like our expected move. I mean, this can really get away from us real quick here, guys. It depends on how fast we come down to 400 this week here on SPY. If we come down to that on Monday, then I don't know what to tell you. I mean, if we come down all the way down that to 400, your main support puts you all the way down to 375. I mean, we could do that all this week. I'm telling you, it can happen this week. So in a bear market scenario, and this is how bear markets start. Whenever you start seeing them buying protection in the value areas after having the growth areas sell down to support, okay, that is a major, major red flag that we are setting up for another leg lower. Okay, I don't know for sure, but that's what I'm saying. So please like my video if you like it. Please retweet my video on Twitter. Please, Gumby9662C. Follow me if you're not following me. And then also, please leave comments below on stuff that you might be seeing that I'm not seeing, and that we can add to and everything. Anybody who's using TOS, in the comments on my YouTube channel, I'm actually going to share my earnings watch list. All you have to do is copy the link. It's a shared link, and then you don't even have to create the earnings list for the week. It'll be down there in the bottom. If any of you guys use it, please put a thank you or something down there if you guys copy that for your Thinkorswim platform. So I appreciate all you guys following my videos. Thanks a lot.